So hey everyone, thank you so much for joining us on today's Camp A2X session, where we bring you the hottest topics and discussions from Camp A2X 2024. If you're unfamiliar with Camp, it's where we bring together the top e-commerce accountants and bookkeepers in the world to discuss the most pressing challenges, as well as new technologies that are available to e-commerce businesses, as well as the accounting and bookkeeping practices that support them. Speaking of the accounting and bookkeeping practices that support them, let's talk about today's topic, which is what's your end game? A panel discussion on building your practice to grow sustainably and organically, growing through M&A, or when and why to consider selling your practice. We have an unbelievable panel of experts that go incredibly deep into each of these different paths. This is a topic of discussion that we had at camp, and we're really lucky to bring you the same exact panelists for this digital version. So I'm going to say thank you to everybody here, and then I'll just jump into a quick introduction. So I'm just going to go really quickly over myself. My name is Jeff, and I'm the head of marketing here at A2X. I'll be moderating today's discussion. We have Chad Davis, who is the founder of LiveCA and the Automation Town community. For those of you that don't know Chad, he's been a pillar in the cloud accounting community, incredibly generous with his voice and his expertise. LiveCA is one of the oldest and largest CAS practices in Canada, having scaled over 70 employees and hundreds of clients. Did I get that right, Chad?
Oh, no, I didn't write this one. So sure, we went over 100. Then we went back down to 60 people because we screwed up a little bit. So it's not all rainbows, but there you go.
Well, we'll talk about that in just a little bit. Chad is going to be here talking to us about why you should consider building your practice to grow sustainably and organically over time. And obviously, a lot of those learnings are going to come from personal experience as well as personal motivation. So, Chad, really appreciate you being here and lending your voice to this topic. We have Pedro Noyola, who is the CEO of Balance Business Group. Balance Business Group is an accounting practice based out of California, primarily servicing wineries as well as other specialty foods. Pedro has deep expertise and experience in the private equity space and actually acquired Balance Business Group in 2021. M&A is definitely at the front of Pedro's mind in that he considers it as a potential lever for future growth. So Pedro's going to be here talking to us about when and why you should consider M&A as a potential growth strategy. So Pedro, thanks so much for joining us today.
For sure. Happy to be here. Thank you.
And then last but not least, we have Emily Cheshire from Aprio. She leads up the managed services as well as the technology practice. Aprio, I think, is either the 25th or the 26th largest accounting practice in the United States. But as far as large practices go, it is one of the most innovative in terms of its use and implementation of technology and how it supports its clients. Aprio is actually quite famous in terms of their M&A strategy, in that it's a big part of how they approach growth. That said, Emily's not just here to talk about M&A. She herself has actually built, scaled, and sold an e-commerce accounting practice. So she's going to talk to us a little bit about when and why you should consider selling your practice as part of this discussion. So thank you so much, Emily, for joining us as well.
Thank you. Looking forward to it.
Cool. They had no idea what I was going to say about them, so that was my attempt at an introduction. I hope I did okay. So before we kind of dive into kind of each of the different paths, the first question that I wanted to ask, and I wanted to ask this one to the group, and we'll start with Chad answering, and then we'll go to Pedro, then we'll go to Emily, the same order in which we introduce y'all, is, so I've been adjacent to cloud accounting practices for the last 8 years as head of marketing at A2X, and then HubDoc as well as Xero. And this conversation around endgame and M&A seems to have become significantly more prevalent in the last 12 to 18 months. It's a topic of discussion at every event. It's a topic of discussion when peers get together. I'm just curious to get your perspective and thoughts on why this is such a hot topic for cloud accounting practices and accounting practices generally today. Chad, I'll start with you.
Okay. The first is, I think a lot of firm owners are realizing it's like really hard to run businesses. And sometimes when things are hard, you look to exit. And when so many people are doing that or they're retiring, the natural buyers will be sought out, and typically that's either PE or a strategic. So that's what happens. But more on the macro side, I kind of think it relates back to like what is attractive to PE firms. That's like stable recurring revenue. And that's why so many went after lawn care and HVAC and all these types of things. So just being able to just say, hey, there's other types of businesses that are out there that have stable recurring predictable revenue and they want to sell. Okay, let's go into this market.
Nice. So a little bit is accounting practices that are kind of considering selling because it's hard, but a little bit is also demand from private equity that are looking for recurring revenue model businesses. Totally makes sense. Pedro, given that you're on the private equity side, well, not necessarily, you're now one of us. But given your experience in private equity, like I'd love to get your perspective on this, especially that you acquired your practice in 2021.
Now, honestly, Chad stole my answer because before I jumped in, I looked at HVAC, I looked at blue collar repair services, and even considered dental practices and vet practices, which have all been really popular PE roll-ups in the past decade. But because they had been really popular PE roll-ups, the valuation expectations in those markets was really high. And this felt like an undiscovered, untapped, very fragmented market. Then to add to what Chad said, there's also like the silver tsunami that, I'm sure we've all read about. There's lots of retiring practice owners and CPAs that don't have anybody to pass on the business to. So I think it's a combination of both those things. And then the third thing I think that sort of dovetails in is that there's just a lot of private equity money that didn't have anywhere else to go. The software market had been shut down. Exits are much harder. They were, a few years ago, you were buying software companies on revenue multiples. Now you're forced to sell them on EBITDA multiples. And so they were looking for other places to deploy capital. And this is one. This is a great one.
Awesome. And what I think is going to be interesting as we get into the discussion is Chad talked both about, on the seller side, like building a practice is hard. And then on the buyer side, there's private equity demand. Pedro, you're talking about private equity demand. Later in the discussion, I want your thoughts now that you're kind of in the weeds on the first comment on the difficulty level of running an accounting practice, given you've kind of been able to see both sides. So we'll put a bookmark in that one for later in the conversation.
Yeah, happy to share the scars.
Amazing. And then Emily, I know that you have a slightly different perspective that is a little bit more focused on technology, which I think is really interesting.
I do, yeah. I mean, I would say, I think if we kind of take a step back and look at the accounting industry as a whole, you're constantly hearing in the media about two things we always hear about is lack of CPAs. Nobody wants to be an accountant anymore. And how AI is going to come in and take over all our jobs. And those are challenges that as firm owners, we're at a point now where we either have to pivot and adapt to that and actually think, I always say, are we going to be Netflix or Blockbuster? And I think we're at that point now. So, and I'm seeing it in terms of, competition with prospects as well, that, it's a good time to sell. If you don't want to start thinking about making giant kind of large decisions and pivoting your business model, now's a good time. Like Pedro said, there's a lot of kind of PE money there. We, as an industry, especially CAS, we're at a point now where, 10 years ago, the recurring revenue model was kind of pretty new. And now we've grown that model. So from an income point of view, it's a very good business to sell. And now it's a very good time to sell, unless you want to kind of jump through those challenges and take them head on, in which case there's a lot of opportunity, but that's a lot of work.
That totally makes sense. And it is great perspective in terms of why this conversation has been picking up steam as of late. I guess, my to segue into kind of this next session, let's talking about, the counter to M&A, which is deciding to build your practice with scalability in mind and organically. Chad, given, running a practice is hard and there is some demand from private equity, but also other sources on the M&A side. What motivates you to decide to go at it? I don't want to say alone, right? But to go at it from a more organic perspective.
I mean, part of it's like you're either forced to or you make a conscious decision. And for me, it was a little bit of both. So the forced part was we'd gone through a lot of struggles in 2022 that forced us to look at different options, whether it was recapitalization or debt or like any type of strategic relationship or just grow it yourself. It was all possible because we were in a pinch, right? It wasn't fun. And through that exercise, you learn a lot about what people value, why people stay working with you, what the market values, and really sort of find yourself around what
Yeah.
type of person you want to be and what type of business you want to spend your days in, because we all have some sort of choice about how we spend our days. So being able to have a conscious decision about that is pretty important. And when you decide to do the organic thing and you take the M&A off the table, it really focuses you on profit, or it did for us. So we didn't have a ton of profit before. We were in growth mode, trying to make sure that this was something big, and there was opportunistic things for people to partake in if they were employees of the company. And I think what was um, really enlightening was that we found ourselves in the process to be able to say, wow, like building a company slowly and profitably and in a stable way that gives the people that are working with you an easy day to go home to their families or to their hobbies or to their pets or to whatever they want to go home to. It's actually really admirable, and it's not a bad thing. It actually could be looked upon as favorable to some people. So I think slowing down, I don't know, I hit 41 last year, and I was just like, okay, this is a little bit different pace than when we started the firm when we were 30 years old. And I expect the answer will be different when we're 45 and 50 and 55. Looking forward to that kind of wisdom. But for us, it was seeing how happy the people were that were around you that enjoyed their jobs and were along for it with you. Like it's just, I won't say mesmerizing, but it was really addictive and really fun.
So building a business that you yourself as well as your staff are like happy and want to come into, that sounds like a very, very reasonable reason to take this approach. From a more tactical perspective, one thing that I have heard from practices that are going at it organically and trying to scale is that the CAS model, and a lot of this is also because of staffing, can be pretty challenging to grow, right? Yeah, like I'll just put it from this perspective. You have employees that started with you a long time ago and they've kind of gained massive amounts of experience and expertise. They want larger salaries, like trying to retain them, but you're also focusing on profit. Like, can you talk to me a little bit about this perception that there's a little bit of a glass ceiling as it relates to growing organically and then how to break through it?
We had to learn that our business was not about the people as much as we thought it was. That's a really weird statement to say, but it's about the framework. And the
Got it.
framework of your business model actually allows people to go further than saying yes to everything. So through frameworks, like I don't want to skip around, like we use EOS, very, very helpful to us. It helped prioritize issues to solve. It helped make meetings a lot more enjoyable. It helped identify accountability chart issues where there were wrong people in the wrong seats, me included. And that framework allowed us to have better conversations, but also align everyone in the same decisions. That, maybe to Pedro's point about the battle scars, like it reduces the battle scars because you now are all on this like level playing field. You understand the framework. You've made these decisions. And if you made a mistake in the decisions you've made for your 1 or 3 or 10 year goals, you switch it And then once you switch it, you use the framework to switch it. And for your discussions about like the glass ceiling, okay, maybe the next strategy means that the people that have the glass ceiling are no longer the right people for the right state of your company.
Yeah.
And you slowly or quickly, depending on the type of person you are, the business you want to run, you make those changes, but you do it within a framework that everybody understands. And it's not this back of the room discussion that only the CEOs have with the head leadership team members. I feel like that's what kills a lot of firms in that sort of like 25 to 85 person mark.
So having a framework that is built around transparency and communication, everyone is aligned on, what they all know, and then you're all making decisions together. That sounds really smart. Jed, you said that your role changed. This is just a really random question. Are you the visionary or the integrator?
Visionary. I have 4,900 unread emails in my carbon. My business partner has 0. He's the right person to be the integrator.
Amazing. Thank you for that. Okay. Thanks for that perspective. You had mentioned Pedro and battle scars. Pedro, you ready to dive into some?
Yeah, sure. Happy to. Which ones?
So let's just start with kind of like the simplest one is, well, before we even get into the battle scars, when you acquired your business in 2021, I'm just curious, like, how did you evaluate that this was the right one for you? And then how did you approach valuation? And then we can kind of get into what the day-to-day looks like. But yeah, like, how did you find it? And then how did you value it? And then get the deal done?
Yeah. So, like I said, I looked at, so let me say, this is my second build and buy roll up. And, I participated in one before that. So in some ways, this is my third. And what I've always done is build boring businesses. I look for essential services that are need to have, that really sell themselves. All you have to do is just find the need, right? It's like you find somebody with the need and you've got the service that fits it, it'll just sell itself. It's not a toy or something that is not essential. So essential recurring service, not too expensive. So like somewhere hidden in somebody's cost stack is sort of the types of businesses that I built before. And like I said, I looked at HVAC, I looked at roofing companies, I looked at plumbing companies. And in the end, I decided I knew the type of business and size of business I was going to buy. I would need to be on the front lines at times, especially during the building phase. And I just didn't want to be under somebody's sink or on top of somebody's roof. That wasn't going to be fun for me. And so I turned to white collar services, found this space, which is funny. Like my education is in accounting. I'm an inactive CPA. I'm pretty sure I at least paid the money to make it inactive. But I never really worked in the accounting space before. So I had to come and like rediscover it and refine it, and found that it had all those attributes that I was looking for. And then I never really looked at brokers before, but a broker had a deal that was close to home for me. Like I could drive to the office if I needed to, fit all those criteria, and was a size that I could take on my own. So this is, the first venture without a partner, without investment partners, like totally off of my own. And so, found the owner who hit her own transition point, and she and I got along really well, which I've come to find is incredibly important to make the transition, smooth and easy. You've got to get along with the person who you're going to be doing that work with.
And then in terms of evaluating the business, was it a multiple on revenue, on EBITDA, or?
Yeah. So, coming into the space from the outside, I was surprised that everybody talks about revenue multiples. That's just the way people, in our world, in this space, talk about M&A and transactions. This type of service business, I'd always been used to looking at are thinking about on an EBITDA multiple, like how much cash flow is generating from the business, and then multiplying a revenue or a multiple on that cash flow. What I found though, and even still, like even though people talk about the revenue multiple, maybe because that sounds cooler, I don't know. When the transaction is getting done and you're talking to a banker to finance it, or to an equity provider, it's still based on an EBITDA multiple. So I did the same thing. I talked about it on a revenue multiple with the broker who was involved and with the seller, but in doing the math and building my model and taking it to the bank, we financed the deal on a cash flow multiple.
And then, Emily, I'm just going to pass the mic over to you really quickly, just to hear from your perspective. Is Aprio seeing the same thing in terms of how it's evaluating business? Is it on EBITDA as well, or?
We basically do custom based on the company, and I think a lot of it goes back to when you think of kind of the title of this webinar, which is like, what's your end game? There is a lot of different end games, right? So some firm owners are done and want to get out as quickly as possible. That was me. It was done. I wanted to have nothing to do with it as soon as I possibly can. Some others really want to be part of a larger firm so they can offer better services to their clients and better kind of specialists. And because it's about kind of matching what that experience looks like. So yeah, everything's going to have a number at it at the end of the day, but there's a lot of different factors that come into it. So it's not really just as straightforward as kind of like EBITDA or like revenue, for example.
Got it. The next question, though, just because I know that this is, a topic that people tend to discuss at events and just kind of trying to understand multiples. So Pedro, like average multiples back then in 2021 on EBITDA, was it like 1 to 3, or like where was it? And I'm really curious to hear everyone's perspective on where it might be today.
Sure. I honestly, I don't think it's changed all that much. Again, like these size businesses, and especially if we're going to, go to a bank, and especially if we're going to use an SBA loan, have stayed pretty steady in terms of their multiples. And that can range anywhere from, say, like 1.2 to 2 times revenue, which will equate to like, somewhere between like 3.5 times, 3.5 to 5 times EBITDA or seller discretionary earnings. And you really, again, if you're going to look for traditional bank financing or SBA financing, they have a pretty tight box, and it has to fit within that box.
Got it. And that's actually really helpful context, especially considering the size of firm that we're talking about. Speaking about size, I know that you've done a little bit of a mix of scaling organically, but then also with an eye on M&A. Do you mind talking to me about the size of the practice at time of acquisition and where it is today?
Yeah, we're 5 people when I bought it. 2 quit in the first week. Wow. So yeah, I tried not to think that personally. My thought process coming in was I was going to buy as many bookkeeping businesses as I could get my hands on. And what I realized really quickly when I got into the business, one is that it wasn't set up for scale, which wasn't a surprise at 5 people. But a lot of the works used to flow through the previous owner. And so even the people who were there weren't well-trained or set up for scale. And so I had to like retranche and fix that before I could go back out into the market and try to do it again. Yeah. And sorry, I lost your question there. Can you ask it again?
Well, the second question is like, now fast forward to today, right? We are it's 24. What is it?
And so the first year was flat. We finished that year maybe at 6 people. I was able to rehire and keep a couple of folks. Today we're about 30 people.
Wow.
And we grew well the second year and grew really well the third year. and are poised to keep growing organically, and then welcome in inorganic acquisitions as they come.
Okay, fantastic. Question for you. So you talked about employee churn post-acquisition. Did you experience some client churn as well?
For sure. It was a very leaky bucket that first year. We're a service-based business, right? When you have employee churn, that leads to really terrible client experiences. And they didn't know me. I was totally new to the industry. It's a very insular industry. People know each other, like everybody talks. And so when one person had a bad experience, it bled over to another person. I was lucky to stay flat that first year, and lucky to be able to keep filling that leaky bucket.
I really don't mean to be exposing the but ultimately, like, it's such a great opportunity for all of us to learn, and we really appreciate your generosity with the experience. But like, here's my last question for you before I kind of segue into Emily. But hindsight being 2020, was running an accounting practice harder, less hard, or pretty much what you thought it was going to be?
Now that we're getting to a phase where there's infrastructure, there's a leadership team, there's somebody responsible for ops, somebody responsible for marketing. It's what I expected. Getting it here from 3 people really was incredibly difficult. Really, really, really difficult. Not having outside resources, not being able to go into a cash burn position, to hire those people to build out the team and the infrastructure and the fixed cost necessary to get to a place where we have a scalable business was incredibly difficult, and way more than I thought I was biting off.
Well, you've done a wonderful job. Like, what you've built is incredibly impressive. And I also know for a fact that the clients that you work with love working with you. So I appreciate you sharing those battle scars. Emily, given that Aprio does M&A to a higher volume, so like we're talking about kind of in the what's your end game theme, one of which is growing through M&A. Has what Pedro kind of discussed in terms of like how challenging it is to acquire and then to scale, is that relevant for Aprio, or are you guys old hat at it at this point?
I think it kind of still that old. I'm laughing because it's still exactly the same, and you're gonna have different size companies, but everyone's got the same issues, right? In terms of, I'm laughing because Pedro, you were talking about kind of making sure there were processes that were standardized and getting that in, so you've got that scalability, and that's applicable at every stage. And when we've got we have to do that at scale, and when we've got new firms coming in that have their own standards, right, and how do you merge that in? And that's still a challenge that we have as well on our side.
So one of the things that I find is really interesting is, so we're talking about process a lot, right? All the way from like frameworks and EOS as an example, and then, Pedro having to implement a process, and Emily saying that that's kind of pretty standard across most business sizes. For those that are on the buyer side, on the M&A side, does the better practice is the better practices process, does that have any influence in terms of how practice can be evaluated in terms of a purchase? Or is it not really?
Well, I think it's kind of at the earlier stage, and it really goes back to, versus just accumulating and kind of merging in everything everywhere. I mean, that kind of leads to chaos. So it's more about kind of at the initial stages, really just making sure that it's a good fit. And as part of a good fit, tech stack, software, processes, how teams are structured, that's all builds into, whether or not it builds into the value, but it certainly builds into do we think this is going to be successful? And I would say, I think as a firm owner, you obviously want that to be successful. You want your team to be happy and with, opportunities. You want your clients to feel that same way. And then obviously kind of for firms that are kind of acquiring other firms, that really helps that integration be, I won't say seamless, but as seamless as it could be.
I think that's an incredibly insightful point, because you had mentioned earlier, we were talking in a previous discussion about, Aprio has been a little bit more intentional with acquisition. You've been focusing on, the right fit or potential like strategic fits. And Chad, I know that you've had this discussion as well with quite a few practices, but there's this perception that like tech stack and process are important factors during the M&A process. But it sounds like, Emily, what you were saying is that fit and strategic alignment is actually comes before tech stack and process as far as the consideration of an acquisition goes.
Yeah, and I mean, like Pedro gave a really good example. You said kind of you really hit it off with the person that was selling the firm, and you probably wouldn't have continued those discussions had you not kind of had that sort of relationship. So it really kind of helps. I think that that there's going to be give and take. It's kind of a I describe it as kind of like a melting pot, and it's it's not this is the right way. It's always, for firms that are coming in, they may be better at a certain process, or they may have, ideas that are really innovative in a certain area. So it's really the making sure that there's alignment in just kind of an overall vision, and then all of the rest kind of slots in. But I think that's kind of key. So I think especially for any firm owners that are kind of thinking about selling, again, having been in that position, I was very mindful about my clients and my team, but I wanted it done. And in hindsight, had I known what I know now, I would have had a lot more in-depth conversations at the earlier stage.
I'm really extracting a very valuable lesson here personally. And I think that maybe the people watching are also extracting this lesson. And it's that, and it really goes back to what Chad said initially around frameworks and processes. Given that frameworks and processes aren't kind of at the top of the consideration list from an M&A perspective, you're not building these things out to set yourself up for M&A. You should actually be building these things out for yourself as a practice owner to scale and build your practice. And as a byproduct, it potentially can help during the acquisition process, but it's not at the top of the list. Is what I'm extracting from that lesson. Does everyone agree, or am I deriving the wrong message?
From my perspective, I think it's pretty bang on, but it does influence the value of the business. It maybe just indirectly, and it also, I guess, it depends on what the buyer thinks they're buying. I would guess normally in these instances, they think they're buying clients, or maybe like really trained, well-equipped people, not necessarily IP, which is where the process and the tech stack and, the systemization, standardization would lie. So maybe they don't put a ton of value on the IP. However, it will show up indirectly in that you're not going to take as many haircuts. So the business, if well run, should be relatively profitable, which again, it's like an EBITDA multiple is the main driver of valuation in these sorts of businesses. And if there's people who are used to working with tech, even if it's not the same tech, if it's relatively comparable, there's not going to be a huge investment in training. There's not going to be a huge investment into building up the tech stack that would have to come off of your seller discretionary earnings, right? Like, you add back your personal cell phone and your personal car, but the buyer is adding in additional expenses that they know they'll have to invest. And so if you have good standards, good processes, good tech, there's less of those haircuts and discounts that are going to come in.
Really helpful context. Chad, I'd love to get your perspective on this, as IP being influential, but not being really kind of at the top of the list in terms of valuation.
And I was listening the whole time and thinking the largest threat that PE has on the accounting industry is that it's forcing Microsoft on everybody. Sorry. um, that's all I have to add. Look, I think I know some really great people buying firms right now, and they're buying what they need, right? They're not just buying something for the sake of buying it. And if you have something that people want to sell or buy, then you're most likely going to sell. And that has to do with your service mix and how much risk there is if they are integrated into your company. So, buying a two-person firm for the clients and for the person is a great example if you need those people. And buying the 40-person firm because you're doing a roll up and you really just want this to be a big play is a great rule of thumb if that's what you want. So I just think there's always a buyer for every seller, and finding it is the hardest thing. And putting yourself out there comes with like pros and cons, because you don't want to be at a conference trying to do this with your team if you're not open about what you're trying to do, and it's like really hard. And I'm not speaking from personal experience. I'm just speaking from like watching people privately say, "Hey, I really want to sell, but I can't do this to my team vocal or in front of them. I have to do it by myself. Like, who should I talk to?" So I just feel like there's a lot of quiet stuff that's happening behind the scenes from firm owners that want to sell. And maybe there's an opportunity for more of those people to get in front of more of the buyers in a more organized way. And I know we're all probably thinking, hey, it's really cool what Carbon did, trying to put carbon customers in front of people that want to buy carbon firms. Awesome. Like, we need more of that, where
Yeah.
there's matching, and like, not to stick on the people that are like doing this professionally, but like there are some groups and some companies that like this is their role, um but they take a lot of money for it. And I mean, I wonder how much there could be benefited because there is such a large pool of firm owners trying to sell it, mostly due to Pedro's silver tsunami comment. Do you really need to go through a broker that's going to sell a $2 million firm for $800,000? Like, probably not.
Yeah.
Like, it's very expensive sometimes to hire those people. And yeah, maybe there's an opportunity here.
I think that's a really insightful point and a wonderful segue to kind of, transitioning to talking about the seller side, right? And we have somebody here that has built and scaled and sold a practice. Emily, do you mind talking to us a little bit about your journey with your e-commerce accounting practice, what the inflection point was to when you were thinking about selling, and then, were you the quiet practice leader at conferences saying, "I want to sell," or did you run a different process?
I made a lot of mistakes, is what I will kind of start off with. It kind of started off in the early kind of cloud practice days where, and actually I'll kind of take a step back and say, I was playing around with Zero one time, and all of a sudden I was like, hey, there is so much business opportunity out here. And this was the practice that was in the UK. At first, Zero had just come in, they'd just launched. It was so early days. And I was sort of playing around with it. And I was like, this is the coolest thing ever. And this is going to revolutionize like the accounting industry and CAS, right? And at which point I was like, I'm going to create an online cloud-based, right, clients everywhere business model, which was great. I mean, you basically just set it up and they just came because it was kind of that early adopter stage, which was fantastic for kind of scale and growth. And it was easy to attract people that wanted to come work for you. The issue I fell into, and I think this is the classic business owner kind of mentality at an early stage company, is that yes, I had standardized processes, but I would break them all the time. So I would have clients say, can you do this? I'm local. Can you come to my office? Right. And I would say yes, because obviously I wanted more revenue and I wanted to grow and it was all great. Well, it got to the point where I kind of was just completely burnt out. I mean, you can't, like there was no process. Everything was different. Everything was unique. It kind of morphed into this sort of its own sort of monster, right? And it was just kind of running, like versus me running it, it was kind of running itself. So I actually kind of took the other option, the polar opposite. So I kind of feel like I kind of came to probably the same inflection point that kind of Chad mentioned, but instead of taking a step back and going, yes, I'm gonna fix it, I'm gonna figure out what works for me. Quite frankly, I just said I'm absolutely done. Right? It was just kind of a snapping point. And I was like, I'm done. And that was what kind of led me to that decision. I will say that's what brought me to North America and therefore Aprio. So it all worked out quite nicely in the end. But effectively, like I said, I wanted it kind of sold as quickly as possible. I just wanted nothing to do with it. So I actually used a broker to do that. But in hindsight, I know you kind of touched on kind of the team, and I'm 100% in agreement with Chad. Like anytime you make a change, and I think Pedro, you kind of touched on this too, is getting the team involved and getting their perspective, and they will have a lot of ideas and bring things to the table and be part of that journey. I told them after the fact, I mean, with a lot of notice, and I was really careful about who I sold to in terms of retaining the team and training opportunities and that kind of aspect. But the mistake I made was not, bringing them in sooner.
That's really helpful context. I mean, appreciate you sharing that experience. I'm sure it wasn't the easiest. I'm just actually quite curious from the time that you went to the broker to the time that you were done with the practice. Give me that length of time. How long did that take?
Yeah. I would say it was kind of a shotgun sale, probably 6 months.
Wow.
And that was, it was probably 6 months between snapping, going to the broker, literally flying off into the sunset to over to Canada. It was quick. And I think that buying and selling any firm is very stressful. So I don't know if I'd recommend doing it in that kind of time frame, to be honest. But again, it goes back to everyone's journey, and reasons are different at the end of the day. And that obviously also impacts ultimately at the end of the day, the value too.
Awesome. Appreciate that. So we're coming to the end of the webinar, and I will have one last question, but I want to kind of just frame some of the lessons that I've personally learned here, and hope that others have learned as well, is that if you are deciding to kind of grow scalable, organic business, Chad, I love, and we've talked about this kind of throughout the session, it's really about frameworks and processes, right? Having the right framework and the processes in place that is like built around transparency and communication and gets everyone on board feels like you can all move the ship in the right direction. And Emily, conversely, mentioned that was actually the breaking point for her practice and why she actually decided to sell. So I thought that was really interesting. The other lesson that I've taken is if you are looking to buy a practice to grow, obviously there's a seller to every buyer, and you're making purchasing decisions for a multitude of strategic reasons, but it sounds like EBITDA multiple tends to be relatively standard. I think, Pedro, your point about kind of like the tight framework and guidelines that SBA loans has is pretty bang on. And I was surprised to hear that the frameworks and the process and the IP, although it indirectly influenced the valuation, it's not a direct influence. So if you're going to do it, kind of go back to step one and do it for yourself to help build a scalable and organic practice. And then on the sales side, Emily, you provided one perspective, which is like if you have made the decision to sell, to go through a broker. But Chad also inadvertently talks about different approaches, running different types of processes, right? Like going to events, talking with peers, and so on and so forth. Actually, I have two more questions. One other question is, if you are considering to sell a practice, and I'm not saying that anyone here is, obviously, but if you were in those shoes, what would you do to find a potential buyer other than a broker?
Two really quick answers. One, like, there are people out there that are actively looking to buy businesses, right? Maybe they're on the call today. I have a friend, his name's Chris Williams. Like, he is very, with System 6, incredibly vocal. He's like, this is my business model. I want to go and purchase companies, and I just want to make sure they're a good fit for what we're doing. He's never been more open. And I just love people like that that are insanely clear with their intentions. So I talked to Chris. Maybe Chris knows other people if he's not a fit for somebody, but like he's an absolutely legend when it comes to just, I want to buy things. Um, the other thing is that I was talking to a guy, I just met him for the first time. His name's Tim Petrie from HT Growth Partners this morning. Had a breakfast call with him. And I learned about his journey through Ascend, which is ascendtogether.com. And what they're trying to do on the PE side is bring people together that can support each other in a very supportive way instead of the sort of traditional way, which might be a little bit more cutthroaty. And he loved every element of that whole process, the people that he's working with, and the peers that he's got to meet across the country. And through, I think their backer is called Alpine. They're just like he didn't have very many negative things to say at all. And like I think if you just find those types of people that are having great experiences and they can share and like talk about on webinars like this, like, those are two great options that people that are looking to sell right now could go to and talk to without necessarily having to invoke a really, really expensive broker. And then if you do decide and you go through a broker because you want something more than what you could do on your own, then maybe the fee's a little bit negotiated because you already have a buyer and
Yes.
you don't have to go so crazy. So those are two things. What about you,
Yeah.
Pedro? Yeah.
Great tactical tips. Pedro?
Did you say me?
Yeah.
Yeah, if you were looking to sell, like chances are, well, if you're looking to sell in a niche, or even like a geographic niche, if not an industry niche, chances are you know a lot of your competitors, and maybe you're friendly with them. I make it a point to reach out to. There aren't that many folks who do what we do, serving food and bev alc clients across the country. And I reach out, introduce myself, say hi, because you just never know when, either on my side or their side, we're going to need to have a conversation, maybe about M&A. And so if I were looking to sell, that's probably what I would do, is lean on those relationships that I'd, tried to cultivate and foster.
Smart competitive relationships, see where they go. Classic BD. Great. And then Emily, given Aprio's volume, where do you see the largest source of your deals and potential deals? Do you have businesses that are actually coming to you and letting you know transparently?
Yeah, I would say it's kind of in a couple of areas. And firstly, yes, we kind of get kind of companies kind of reaching out directly to us, but it's also kind of just within our network. So anyone can kind of bring in, opportunities through their network. And again, it goes back to kind of the, are you in a specific niche? Are you in a specific service line, specialist area? And the people that you work with kind of frequently. And I think that's kind of a bigger kind of gauge for success, because it's not, you're not going in blind. You've potentially known them. You've been at some of the same events for years, collaborated with them, potentially shared some clients with them. And I think that makes the whole kind of process a little bit more seamless, because you've already got that, relationship that's built up over time too.
Nice. It sounds like at the end of the day, it's a lot of relationship management, being transparent about your intentions, connecting with competitors, going to industry events. Like there's a lot of value in all of these things that we do. Camp A2X as an example. I love the ecom CFO and seller accountant example, a recent acquisition. Both members of our e-commerce accounting community, both spent time in person at an event like camp. These things matter, and they might not yield anything in the short term, but you never know over the long term, right? So the last question before we hop off is, if you had kind of one tip to give yourself based on all the learnings that you've had over the last 12 months about your particular area, and I'm going to talk, Chad, yours is going to be around building to grow organically. Pedro, I'd love to hear yours from an M&A perspective. And then Emily, I'd love to hear your tip from the sales side. So Chad, I'll start with you. Like what, look back at the last 12 months, what's one thing that you wish that you knew?
Well, Yeah.
Just
It's,
one.
it's funny because if you knew what you knew then, what you know now, would you really be here? Would you be somewhere? I don't like this is a really meta question, and I'm not that smart. So, what would I want to know? I, I think as you're going through, and I'll make this about EOS because I really do think EOS is going to take off in the accounting industry. There's going to be a lot of firms that start it and stop it and go really deep. And like one of the lessons is like if you have these right person, right seat issues, try not to fight it. Maybe lean into it because there's always something better for what you're good at, right? And I'm not talking about personal experience for me, but I'm just thinking that it's something I see a lot of people struggle with because maybe they're in 4, 6 seats and they just can't get past the fact that that's what they have, and it's a really weird piece of advice because it's like super EOS specific, but it's like try not to fight the right person, right seat issue.
I mean, is that really EOS specific? That just sounds
Nah,
like really great advice for any business. Like if you don't have somebody in the right seat, but they're great, try to find another seat. You know,
or another business or something. It's
another
just like
business.
there's more to life than work. Yeah.
Yeah, it's a really great piece of advice. Appreciate you getting meta on us, Chad. Pedro, how about you on the M&A side?
No, I'll start with Chad. I think you're right on EOS because we also implemented EOS and a huge fan. But on the M&A side, it's probably like don't count on it, but be ready for it. So I don't bake it into our budgets or models or even our EOS goals. I did, and I learned my lesson to not do that. But we build systems and processes and have people in the right seats to be ready to bring in acquisitions opportunistically.
Nice, love that. And then Emily on the seller side.
Yeah, I would say it's just kind of planning. So kind of from the seller side, really taking the time to plan. Don't do what I did. Do what I say, not what I did. And it goes back to kind of just structuring and like what your vision is, making sure you got the right processes in place, making sure that you're ready for due diligence because that will hit you like a ton of bricks. And you're also trying to run the business at the same time, right? So you want everything to be perfect. Actually, this webinar is timed so perfectly because this time of year is a really good time. And I do this kind of personally every year, is just to kind of reflect on the previous year, like from, yes, personally, but from a kind of a business perspective. And that's going to shape what do you need to do next year. And it's always about, so if the goal is to sell, do you have those connections? We all talked about relationships. Now is a good time to start kind of building those. And then simultaneously kind of work on, do you have the right team? Do you want to go and increase margin? And therefore, do you need to kind of start pivoting your business model? But now is the perfect time to kind of do that. And so you can kind of gear up for, the direction that you're wanting to go kind of next year.
I love that. So I just want to say thank you again, everyone, so much for sharing your time and your expertise. I know that I have learned a lot, and even being on the tech side and being a part of a few acquisitions, one that actually fell through the cracks during the due diligence process, Emily. So that is very good advice. But I've even learned quite a bit from you all today. So I just want to say thank you again, and really looking forward to what conversations we're going to have at Camp A2X 2025. So thanks all. We'll chat soon, and good luck out there.
Thank you.
Bye.